Hi there, in this video I'm going to talk about the bank reconciliation, which is an internal report that is usually made by the company at the end of every month to reconcile the bank balance from the bank statement along with the balance of the general ledger and record any discrepancies between the two reports in the company books. So a good example here we see it is the bank statement, which has three sections. The first one, any checks and debits that has been made by the company. And you might see here that there is some amounts at the end of that section. One of them called DM, which stands for Debit Memorandum. Another one, NSF, which stands for Not Sufficient Fund. And those two amounts are usually subtracted from the company balance for the bank service charges and any bounced checks from the client. The other section talks about the deposit and the credits, and you might see in the middle here there is one amount called CM, which stands for Credit Memorandum, which is usually made by the bank for any collection on behalf of the company, and it has to be added to the company balance. And then we see the balance from the bank statement, and our job is to make sure that the bank balance is equal to the company balance. How we do that? We make the bank reconciliation report, and what we usually do in our bank reconciliation report, we add the deposit in transit, which means it's some checks that has been recorded by the company but not recorded by the bank yet. Why? Because it's still in transit. The other amount is outstanding checks, which has been already subtracted from the company books, but not subtracted from the bank statement because they are still outstanding. We have to subtract them in the bank reconciliation report. On the other side, any collection that has been made by the bank but not recorded by the company, it has to be recorded. Any credit memo that has been recorded by the bank but not recorded by the company, it has to be added. And for NSF and debit memo, it should be subtracted. And in both sides, you might see here some errors could happen. And there is no standard for treating the errors, so we have to take them case by case. At the end, after making the reconciliation, the bank balance should match the company balance, and we make journal entry to do the adjustments. How we make the journal entry? For all the items that has been added to the company, we debit cash and credit each items. And for all the items that has been subtracted from the company balance, we debit the items and credit the cash. Let us see a good example here to show you how to create the bank reconciliation and journalize the differences. So here it's a long example. I will split it. If you want, you can hold the video, read the example, and then continue the video again. But I will split this example into the two sections as I showed you in the model. So first of all, the balance per bank is $7,000. In the first point, we see cash receipts from the company for about $5,700 doesn't appear on the bank statement. This one we call it checks in transit. The other item, outstanding checks for $6,000. How do we make it in the bank reconciliation? First, we create the title for the bank reconciliation, then we put the balance, and then we put the deposit in transit, then the outstanding, and then we add. So here it looks like this way. We put the cash balance 7,000 plus the deposit 5,700 minus outstanding checks 6,000. We get 6,700 for the cash balance per bank. I'm sorry, here it should be per bank, not per books. Then we have item 2, 3, 5, 6, and 7. For item 2, we set a debit memorandum, which needs to be subtracted. For item 3, when you read it carefully, both the bank and the general journal are correct. But the mistake happened in the subsidiary ledger, which means we don't need to record it in the bank reconciliation. So you can cross off number 3. In number 5, the check was written for 409, but the journal entry has been made by 490. So now there is a difference of $81 that needs to be recorded. For the NSF, 360 needs to be subtracted, and for the credit memorandum, for the amount of 1,500 should be added. For the interest, 60 also should be added. So we put it this way. The cash balance per book, then we add the error that happened in the accounts payable, then the collection that has been made, minus the debit memorandum and the NSF check. And it looks like this way. Then when you put them together, you see that the bank balance is matching with the book balance. And now we need to make 2 journals. The first one for all the amount that has been added, the second one for all the amounts that has been subtracted, and it goes that way. So we debit cash, credit accounts payable, notes receivable, interest revenue. And then we debit miscellaneous expense, debit accounts receivable, and credit cash. This is in brief how to make the bank reconciliation. I hope you find this short video useful for you.